So Sam and most of the people in the crypto world were always guilty of the sin of shitcoinery, or pumping and promoting unregistered securities. And that was obvious to the chair of the SEC, to most politicians, right? The phrase that pops up over and over again is the vast majority of all crypto tokens are unregistered securities. But I think the diabolical twist in the FTX story that none of us saw coming, but it is particularly diabolical, is so Sam creates, $8 billion worth of air token with SRM and FTT. Then he issues himself locked token, secret locked token, marks it up on his balance sheet by another $4 to $8 billion and calls it $16 billion worth of collateral. Okay. Then he goes shopping for a bank to give him a loan against this. Well, if I took $1 billion of Apple stock and I went to a legit bank, Bank of America, JP Morgan, Goldman Sachs, I say I got $1 billion of Apple stock, they would say, well, we will give you collateral value for up to the amount you have, or 5% of the daily trading liquidity on a legitimate regulated exchange. So if you show me a security that trades $1 billion a day and you have $1 billion of it, I might give you $50 million of collateral value. And that means you could borrow $25 million against it at 50% loan to value, but I'm going to margin call you if it moves a tick. So it means, practically speaking, $1 billion of that legit security is probably going to give you $10 million worth of a loan.
On $1 billion.
On $1 billion.
That's 1%.
Okay, right? Because the gating factor is, what's 5% of the trading liquidity of that token or that asset? Because if I have to dump that thing in the market, I want to sell the entire position without moving the price.
Sure.
Okay, so that's the traditional world onshore. What Sam did was generated $14 to $16 billion worth of Solana, FTT, Serum, and then he went shopping for a bank to give him a loan. But he didn't want, you wouldn't get a loan from Goldman Sachs on it. No one's going to borrow you money, at least no non-crypto company. So what he did was he went to himself. He runs a bank called FTX. He applied for a loan from himself. He granted himself the loan.
For a loan from himself.
Well,
right?
secretly applied. He didn't tell anybody, but he when they say, well, Alameda had a margin account and the margin position was slightly bigger than I thought, what he means is, oh yeah, they pledged a few $1 billion of air token, gave themselves a $10 billion loan, and they extracted, even if he had pledged $15 billion worth of air token, giving yourself a $10 billion loan means that you gave yourself about 100x the collateral value you would have got on a regulated exchange onshore. So what he did was, in essence, extract $10 billion of real stuff, dollars, Bitcoin, saleable assets, and he pledged $10 billion worth of air token stuff. Here's the diabolical twist. I didn't just generate $10 billion of an unregistered security to dump it on the unsuspecting retail. That would take me 500 trading days, dumping 20 million a day, right? He didn't do that. What he did is he generated $10 billion in unregistered security and then just borrowed $10 billion secretly from his depositors, and then went and gambled it, traded it, spent it, lost it. You start with this fiction that FTT is a real thing. If I create, again, like yo-yo token, and I manipulate the price up to $10 billion by trading 2% of the float, if you think it's a real thing and I act like it's a real thing, then I pledge it as collateral and you give me real stuff for an air thing. And so there's like $4 billion of that, and they went and they lost half of that. That was part of the reason that Voyager and BlockFi going bankrupt. And the reason that Sam wanted to bail them out is he didn't want to actually have the loans called, right? He was actually trying to buy BlockFi and buy Voyager with FTX equity, which of course is fraudulent and worth nothing. But if I borrowed $1 billion from a company and they want the money back, and I can simply give them $1 billion of equity, take over the company, and not pay the loan back, I can roll the entire fraud forward. So that's the second. The third is, this is also diabolical. FTX said, we're built by traders for traders, and Sam bragged that they only charge like 3 basis points trading fee, and he was 30 times cheaper than Coinbase or much cheaper than Binance. So he's stealing customers off of the other crypto exchanges by, in essence, offering near free trading. He's not trying to make money off the trading. He's trying to actually get the assets on his platform, because once he had the assets on his platform, he basically used FTX like his own personal piggy bank. It's like there's $10 billion there. Everybody else is going to get wiped out if their margin positions trade down 20% for a minute, except Alameda. Alameda has God mode. They never get margin called.
We have breaking news. Sam Bankman-Fried, the founder of the collapsed crypto venture FTX, has been arrested in the Bahamas.